NW 1120 AM, NW 275 CM FM, Concord, Boston. The Money Matters Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
As you navigate life after divorce, planning for your family's future becomes even more important. Hi, this is Mike Armstrong from the Armstrong Advisory Group. From everyday expenses to thinking about how college will be funded, it's important to have a clear plan for how all of your upcoming costs will be handled over time. Divorce also means adjusting to a new financial reality, where one household becomes two and your budget, saving strategy, and long-term goals may need to be reevaluated. Our new guide is called Divorce and Your Financial Plan, and it discusses ways to build a financial strategy that supports your family's next chapter. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child. Plus, you who sold the house might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zada and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zada and Marc Fandetti.
Chuck, Mark, and Tucker with you. And for those of you unfamiliar with our show, which is hopefully none of you, but for those of you who might be unfamiliar, the way it works is every morning Tucker comes into the office, grumbles a little bit about how dark it is, how cold it is, and how bad the traffic was.
That's right.
And then goes through all of the major, news of the day and prints out the stuff that he finds either interesting or stuff that he knows is going to get a rise out of me just to, tweak me a little bit during the course of the day. And it's what we call the stack. And at the end of the show, we go through what we haven't done, stack roulette, blah, blah, blah. We're at the point now in the news cycle where the stack is out of date by the time we actually start the show. Not in that Tucker is doing a bad job. I'm not saying that. It's just that things are moving very, very quickly as far as what is going on. So the top story is one that was titled "Iran Conflict Turns Shipping Market into the Wild West," and that's true. We're going to get to that in just a second.
PPI.
No, we're going to get to that in just a second.
Got?
See, this is what I'm saying. Things are out of date.
Things are moving fast, baby.
Things are moving fast. So this morning at around 8 a.m., the Israeli government indicated that they had conducted an attack on what is known as the South Pars gas field. If you're not familiar with what this is, the South Pars gas field is estimated to be, not estimated, it is the single largest natural gas field in the world. And the estimates are that it may actually contain more natural gas reserves in it than every other deposit on the planet combined. So it's big. It's also right in the middle of the Persian Gulf under about 8,000 feet of water. So it's, not something where you can just get to it easily. And why this matters is not only did Israeli sources indicate that this had been attacked, the Iranian government also confirmed shortly after, about 10-15 minutes later, that it had been attacked as well, and that they were conducting a partial shutdown of some of the production facilities there. Why this matters is that this is effectively an escalation as it relates to potential targets both on the United States and Israeli side as well as on the Iranian side. To this point, the targets in the energy sector have largely been what we call midstream or downstream targets. Midstream being the transport of oil and gas, either in the form of pipelines or tankers. Downstream production being, tanks and things like that. Things that are holding oil for potential transport somewhere else. So basically, where we sit right now is that Iran has also now indicated that they are going to. They've issued evacuation orders for 5 energy sites in the UAE, Bahrain, and Saudi Arabia, I believe. Or no, UAE, Qatar, and Saudi Arabia. That they are likely to target in the coming hours, days, whatever it might be. But here's where this matters, is to this point, the issue that most people have been focusing on has been hey, how can we get oil moving through the Strait of Hormuz? This is before you even talk about the fact that there's about 8 or 9 million barrels a day in production that's been voluntarily taken offline because there's nowhere to put it right now. Iraq has pulled about 3 million barrels a day. The Saudis have pulled a couple million. Bahrain's pulled a couple million. So like this has been happening. When you start talking about the destruction of production facilities, now you start getting into stuff that means that, hey, even if you get Hormuz open, you might not have oil that you're able to immediately turn right back on. Even the shut-in stuff takes a little time. But if you have oil and gas that you can't just turn back on, you have a real problem even getting anything to send through Hormuz, let alone, hey, great, we're allowed to go through there now. So this is absolutely an escalation. And by the way, the oil market has interpreted as such. The reason being, when I woke up this morning, the May contract for Brent crude was sitting at about $103 a barrel, which was down 40 cents overnight. As I talk to you right now, it's at $109.12, up $5.70, so a $6, about a 6% reversal in Brent crude. And so, again, this is not like me telling you, hey, this is worse. This is the oil market saying, hey, this is worse. So I'm not putting my own spin on this. It's very much the oil markets had kind of, I don't want to say like settled, but they had calmed down a little bit. You weren't seeing, 10% daily moves. It was, a couple percent here, a couple percent there for the last couple days. And this represents a fundamental divergence in the activity that we've seen. And it happened. I was sitting at my computer. It was, okay, this news came across and oil jumped immediately and hasn't stopped climbing since. So this is where we stand right now in terms of, potentially further escalations happening. And the other piece that you have to remember on this that I'm going to come back to probably, I hope I don't have to come back to it. When we talk about liquefied natural gas, LNG as it's known in the biz, LNG doesn't exist in that format in the wild. You don't just go and, say, hey, there's some LNG here in the ground, let's get it out. The way that you make LNG, if you're not familiar with it, is you take a whole bunch of natural gas out of the ground and you cool it way the heck down to, I think it's pretty close to absolute zero. You're talking like a couple hundred degrees below zero is where you take this stuff. Let me pull this up. Hang on. I'll get the exact temperature just so that you can, have it. What is the temperature of... I just want to make sure I have it right.
Let me know if I can help.
No, it's fine. There's the keyboard on my computer is broken, so I have to do it on the old phone. Oh, come on. No, don't auto-correct me. There we go. Okay, what is the temperature of LNG? Here we go. Yes, I was correct. Negative 260 degrees Fahrenheit.
Oh, okay, so not much moves at that temperature.
No, it's cold,
Holy
and
crap.
that's how it's negative 162 Celsius, negative 260 Fahrenheit. So it's
That's like
cold.
space cold.
Yeah, it's you got to cool it a lot.
Oh, I had no idea.
This is a process that's called liquefaction. And liquefaction is really energy intensive, obviously, because you basically have to suck all of the heat out of where you're going to hold the LNG. That's how you do it. You can't pump cold in. You have to suck heat out. That's ultimately how it ends up working. Even if you think about air conditioning, really what you're doing with air conditioning, you are sucking heat out of a room, and the cold air is what you're returning to it. That's why with a heat pump, you're just reversing the flow. So it's basically like giant heat pumps that are really powerful that do this stuff. Long way of saying, liquefaction terminals and LNG export terminals. The going rate for one of those today is $8 to $15 billion, and they take anywhere from 3 to 5 years to build. It's a long process. The place I'm going in a worst case scenario is if you start seeing LNG terminals actually blown up. Now you're talking about, okay, even if Hormuz starts flowing again, you don't have anything that you can ship through there in the form of nat gas. You can't just ship non-LNG nat gas. You'll get nothing on a boat. There's a reason why you liquefy it. It's the only way to make it, cost competitive as it is. So ultimately, once you start moving up the escalation ladder, you start talking about this, and that turns this from, hey, potentially a weeks or months problem to a year's problem in terms of getting that supply back online. This is before you even get to the question of, okay, let's say that there's an LNG terminal that gets destroyed in Qatar. Who's going to finance building the new one knowing that the previous one was blown up by the Iranians, if that's the case? Like, how do you get insurance underwriting for the thing? What if it just never comes back? Like, these are reasonable questions to ask. And they're reasonable because, by the way, a lot of you listening might remember Gulf War I, where prior to Gulf War I, Kuwait was kind of like the jewel of the Persian Gulf. It never recovered from Gulf War I. It just never did. And so I think it's a reasonable question to ask, look, what if the same thing happens to Dubai and Qatar and, like all these different countries down there? What if you end up with that kind of situation if the damage gets too significant? What if you just have, basically, Western businesses that say, no, we're not going to underwrite that risk because it's not worth it to us? These are thoughts that I have on days like this. Let's take a quick break. When we come back, let's then talk a little bit about the PPI data that we got this morning. Producer Price Index came out at 8:30 a.m. We'll tell you what we saw, what it means, and, I guess that's what we'll do after this.
Stay connected between shows. Follow the Financial Exchange on Instagram for daily clips on business news from New England and around the country. This is the Financial Exchange. Life estates are sometimes used to protect your home as part of your future, but it's important to understand how they really work before making any changes to your estate plan. Cushing & Dolan are experts in elder law and taxation. Their new guide, called Calculating the Consequences of Life Estates, explains the pros and cons and why careful planning is so critical. A life estate can allow you to remain in your home while transferring future ownership. But decisions like putting the property in your children's names versus using a trust can have very different consequences when it comes to taxes, control, and protection from creditors. Before you sign any deed or transfer property, be sure you understand your options. Call Cushing & Dolan at 866-848-5699 and ask for your free guide today. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
When going through a divorce, understanding the rules around your finances can make a real difference. This is Chuck Zada from the Armstrong Advisory Group. State law plays a major role in how assets are divided, whether that means a strict split or a distribution based on what the court considers fair. Health insurance and Social Security benefits are other considerations that you'll need to prepare for. You may have been covered under a spouse's plan and now need to find one of your own, and Social Security may offer benefits based on your former spouse's record. Our new guide, Divorce in Your Financial Plan, will walk you through these issues and more to help you make informed decisions that may affect your future. Call 800-393-4001 to request your free copy. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
Hi, guys.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Hey, the Money Matters mailbag is coming tomorrow on the Financial Exchange. It's a brand new segment, and it's your chance to ask the questions about business, the economy, and many more that you want answers to. Call 339-399-4333 and leave your voicemail anytime, day or night. Once again, it's the Money Matters mailbag. All you have to do is call 339-399-4333 or email us to tfeshow@gmail.com, and we may use your question on the show.
And feel free to either tell us how, wonderful our ideas are. You can tell us, Chuck, I think you're a moron. I don't appreciate, what you said.
Well, we're looking for questions.
You could say, hey, your haircut looks bad, and I'd say, thank you.
You could say, hey, Chuck, why are you a moron?
The answer is, cat doesn't change its stripes. Tiger doesn't change its stripes, Let's talk a little bit about PPI, which doesn't change its stripes either. See what I did there? PPI, the Producer Price Index, the most misread price index in all of economics, came in this morning, and it came in hot. Reading was expected at 0.3%, came in at 0.7. Core came in at 0.5 compared to expectations of 0.3. So you now have core PPI running 3.9% year over year. Headline is running 3.4. So it's roasty. Like you've got roasty numbers here. And the estimates that I've now seen are that it's going to push up February PCE into that 0.3 to 0.5 range, probably right around 0.4 is where most of them are converging. But again, no one knows with 100% certainty. So remember, this is from February, even before you have the energy price shock that you have here. You've got, a couple of readings. This is 2 in a row on PPI now that have come in warm. And so you've got something happening in terms of the prices that are being accepted by customers here. And that is not a great sign for the inflationary picture even before you get to this energy price shock. I do now want to get to, again, PPI is it's the third most important out of the major three price indices. So we don't really get into it a ton. It is what it is. A couple things that just caught my eye. The first, Iraq has now confirmed that Iran has shut off nat gas supplies that go to Iraq. And why this matters is that an awful lot of Iraq's power, Iraq doesn't produce much nat gas. I know it's kind of hard to believe given where it is, but they produce, before this, about 4.5 million barrels of oil and not a ton of nat gas. So in order to power their economy, they need that nat gas coming in, or they have to rely on, fuel oil, which they can only produce so much of because they need to export it in order to actually make the economy work. So what you have here is, remember, in order to actually refine oil or actually do anything as a country, Iraq needs nat gas from somewhere else because you need to produce power to do these things. And so this is kind of a big deal for Iraq in terms of, its overall stability and ability to maintain its electrical grid and things like that. This is kind of a big one and potentially has, further knock-on effects in the region as we go. The other piece is one that was in Bloomberg this morning. Actually, it was yesterday, and Tucker didn't put it in the stack, but it just came across my screen, and I said, oh, this is interesting. So, yes, Tucker, I am ripping you for not putting this one in the stack.
Talk to me, babe.
Asian refiners scour the world for oil with Hormuz flows halted.
Missed it.
I know. It's okay.
There's so many things.
Listen, Tucker's hit rate is like 99.99%. So this is, the exception that proves the rule. I'm going to quote from it here. Asia's oil refiners are ramping up crude purchases from outside the Middle East, the latest sign of a scramble to secure supplies as shipping through the vital Strait of Hormuz remains all but halted. After initially balking at sky-high crude prices, Asian fuel makers have returned to the market to secure cargoes from the U.S. to Africa and the North Sea with scant signs of a resolution to the war. They're now willing to pay elevated premiums to secure supply, traders familiar with the matter said. Why this matters? The first couple weeks, remember, you still had tankers that were coming from Hormuz because it takes anywhere from like 11 to 19 days to make the trip from Hormuz to wherever you're dropping off in Southeast Asia. We're now on day 19 of the conflict, which means there's nothing else coming from there. So that oil at sea is no longer going to be coming through. And so this is something where if you talk about the cost to ship a barrel of oil anywhere in the world, it's typically like $1 to $3 a barrel. It's a relatively low cost to, the overall, cost structure. When you're now looking at these countries, whether it's Pakistan, Thailand, India, Taiwan, Japan, these are places that don't really produce much of their own oil and typically get a lot from the Middle East. They're now saying, okay, this is not, over today. We need to start securing supplies elsewhere, and that has the potential to put upward pressure on crude prices, whether you're talking from, Europe, talking Brent crude, or the U.S. West Texas Intermediate. This then gets us to the obvious question that people are going to ask. Sorry, Mark, I'm going to let you say something today at some point.
I'm good.
The obvious question that people are going to ask is, okay, in order to keep our prices down, should we ban exports of either crude oil or refined products? And the answer is, in the short term, that can provide a benefit for 2 to 3 weeks. The downside is that the U.S., for all of its, production capacity, the refineries are not set up to refine the type of oil that we produce. They can refine some of it, but a lot of them are designed to refine other types of oil beyond what is produced in the U.S. And so here's where you get to after a couple weeks. Let's say the U.S. imposes an export ban. That probably brings prices down a touch in the short term because you're no longer connected to the world market in the same way. But the problem is, because of the mix of oil that you produce here versus what your refineries need, if you want to produce diesel and distillates and bunker fuel and stuff like that, you don't get that from, the light sweet crude that you produce largely in the U.S. You need to get it from heavier sour stuff that comes from elsewhere. And so the problem that you run into after about 2 to 3 weeks is your domestic supplies of the feedstock for that are gone. And now other countries have said, fine, you're not going to send us your products. We're not going to send you ours. And now you don't have high prices. You have shortages because you don't have the feedstock for the ways your refineries are set up to produce the products that you need for domestic consumption. So you'll probably hear the idea of export bans bandied about. They will help prices in the short term. The problem is after that short-term period, they start leading to actual shortages because we just don't have refineries that match what the U.S. produces because we need other types of oil to make the actual finished products that we need. There we go. Let's take a quick break here. When we come back, Wall Street Watch and Todd Lutzke joins us for Ask Todd right after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Protecting your home at the Life Estate can be problematic if you don't understand the rules. Cushing & Dolan's new guide called Calculating the Consequences of Life Estates can help you learn about how this strategy works and what to consider. Call Cushing & Dolan at 866-848-5699 and get your guide today. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is Mike Armstrong and Paul Lane from the Armstrong Advisory Group out with our brand new guide for the month of March about divorce and your financial plan. And certainly while it's not the path that anybody hopes to go down with their marriage, many marriages do result in this, and it results in a full reformatting of their financial scenario. Now, Paul, understanding these different assets that ultimately need to get divided in the event of a divorce gets pretty complicated. So let's start with the basics when you're thinking about retirement assets versus the home versus, say, a checking account. How does one need to be thinking about these different buckets of money when they're talking about the equitable division of assets in a divorce?
Yeah, Mike, first you have to divide out those different assets into those buckets you were alluding to before: pre-tax retirement savings, real estate, as well as after-tax investment accounts. And what you have to understand is with the pre-tax retirement savings accounts, there are taxes and potentially penalties associated with those. So those assets are not equal to perhaps some money in a bank account, for example, that is much easier to access and withdraw. Same thing with real estate. Equity might be significant in a property, but there are a lot of carrying costs and expenses associated with that ownership.
Yeah, these things are complicated, and unfortunately, what it can lead to if you're not prepared for it is a division of assets that doesn't work out in your favor once you consider the after-tax implications of that division. If you have questions that you're facing as you head towards this life move, get your copy of our new guide, Divorce and Your Financial Plan. It's available by calling us at 800-393-4001. Again, it's the free guide, Divorce and Your Financial Plan, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets modestly selling off with oil prices climbing higher after Iranian state media reported explosions in the world's largest gas field. Investors Also awaiting the conclusion to the Fed's meeting today, where rates are expected to remain steady. Right now, the Dow is down by 0.9% or 420 points. S&P 500 down 0.6%. NASDAQ also down 0.6%. Russell 2000 down 0.9%. 10-year Treasury yield up 2 basis points at 4.23%. And oil up 3%, trading at $99 a barrel. Shares in Macy's are up nearly 4% after the department store chain said its sales were unexpectedly lifted by its Bloomingdale's brand, where it saw a surprise 1.8% rise in same-store sales in the fourth quarter. Sticking with retail, where Lululemon posted a decline in profit after it sold more products at a discount. Shares are rising over 2%. Meanwhile, Bloomberg reported that Unilever is considering a separation of its food assets to focus on beauty, personal care, and well-being brands. Unilever's stock is down by almost 3%, and chipmaker Micron Technology will report earnings after today's closing bell. I'm Tucker Silva, and that is Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
Todd Lutzke from Cushing & Dolan.
Slow down, buddy.
One speed only, Todd. Todd joins us now on the Financial Exchange for Ask Todd. As always, it's your opportunity to ask Todd your estate planning questions live on air right now. We got the phone lines open at 888-205-2263. That's the number to call to ask Todd your questions. It is 888-205-2263. And remember, we can usually get through 2 or 3 questions, so if you don't call early, well, you might not get a chance to ask Todd your questions. So get calling at 888-205-2263. Again, that is 888-205-2263. Mr. Lutzke, how are you doing today?
I am never better. You?
Not good.
No, you're never good. There's always something wrong.
I bought the world's worst thesaurus.
Worst thesaurus.
It's not just awful, it's awful. It's awful.
It's awful.
Todd, I want to talk to you a little bit about kind of continuing a conversation from last week. We were talking last week about the use of life estates as part of an estate plan. And I don't want to put words in your mouth, but you were pretty critical of them as a tool.
Yeah. Life estates are problematic.
Give me a comparison and a pros and cons of life estates versus irrevocable trusts for estate planning.
Okay, so this will be the abridged version, but let's see if we can make it. The crib notes. Remember crib notes?
I do.
Yeah, this is the crib notes version. If you want to protect your home, that's the goal of a life estate. So it's also the goal of an irrevocable trust. How do we protect our primary residence, if that's what we're talking about? So if I set up a life estate and I put the house in the hands of the children and I reserve the right to live there, what have I done? I have the right to live there, I have the right to collect rent, and I have the right to pay bills. That's about it. But the good news from that is not only do I at least have the right to live there, but if I die, the kids will get a step up in basis for capital gains tax purposes. And in 5 years, the house would be protected from the cost of nursing home care. So it's not altogether horrible. It's going to at least accomplish those things, which are good from a capital gains tax standpoint and a protection standpoint. So
sure.
I'm good. And I avoided probate. So that's good. But remember, folks, when we do this, we often do this and live a long time, right? We might be 65 when we set these things up and life changes, right? We want to, move. We want to downsize. We want to move to a nice warm climate, perhaps. What about selling? What have I given up? Well, a couple of things. One, I've put the house in the hands of the children. If I do it that way, that's the version I'm talking about.
Mm-hmm.
I've now exposed the house to the kids' creditors. Granted, they might not be able to take it against me while I'm alive, but They're going to have to deal with it. What if they get divorced? What if there's a car accident, a financial problem? These kids now own that piece of the property, that future interest that you gave them. Okay, well, that's not good. It's not good for them. It's not good for you. It's not good for anybody. Okay, well, then what if I do want to sell it? What if I want to move? Well, now you need permission. You need to ask the kids, can I sell the house? Well, hopefully they both agree because you're going to need both people to sign, or if you have 3 kids, you need all 3 kids to sign. Okay, well, Todd, my kids are great. They're going to go ahead and sign for me. So we got past that hurdle. Well, now when you sell it, remember you have to calculate how the gain is allocated and how the proceeds are allocated. And then depending on your age, a much larger portion is likely to go to the children and a smaller portion to you. Okay, so that's not great because now I got less money. And if I have less money, I probably don't have the money I need to buy another house. Oh, and even if I did have the money I needed to buy another house, that new house would be at risk of the nursing home all over again. Okay, but now the kids have a portion of the gain. If they don't live there, they have to pay capital gains tax on all that money. So they don't get the exclusion that I get for living in my primary residence. So there's an adverse capital gains tax consequence. And then if they're nice enough to give me the money back, then they can pay a gift tax on top of the capital gains tax to give me the money back. Now I can take all my money and go buy a house. And then I have to start the 5-year clock all over again. I don't think I need to go on.
I'd prefer that you don't.
That's really bad.
Talking with Todd Lutzke from the law firm of Cushing & Dolan. If you've got questions for Todd, this is your chance to ask them live on air right now. 888-205-2263 is the number. Still room on the phone lines at 888-205-2263. And again, Todd can help to answer some of your big questions about estate planning. Let's take a quick break here. When we return, we're going to get to your questions with Todd. That phone number is 888-205-2263. One more time, it's 888-205-2263.
Ask Todd with Todd Lutzke every Wednesday at 10:30, only here on the Financial Exchange Radio Network.
As you navigate life after divorce, planning for your family's future becomes even more important. Hi, this is Mike Armstrong from the Armstrong Advisory Group. From everyday expenses to thinking about how college will be funded, it's important to have a clear plan for how all of your upcoming costs will be handled over time. Divorce also means adjusting to a new financial reality, where one household becomes 2 and your budget, saving strategy, and long-term goals may need to be reevaluated. Our new guide is called Divorce and Your Financial Plan, and it discusses ways to build a financial strategy that supports your family's next chapter. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your home at the life estate can be problematic if you don't understand the rules. Cushing & Dolan's new guide called Calculating the Consequences of Life Estates can help you learn about how this strategy works and what to consider. Call Cushing & Dolan at 866-848-5699 and get your guide today. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
You're listening to Ask Todd with Todd Lutzke on the Financial Exchange Radio Network.
Still got a bit of room on the phone lines for your estate planning questions at 888-205-2263. That number again is 888-205-2263 for your estate planning questions. Again, 888-205-2263. Let's go to Marie in Springfield. Marie, what is your question for Todd?
Yes, I have a trust that was written in 2013.
2013?
Yes.
Okay.
And it's very hard to read. I get to about page 10 and you've lost me.
Mm-hmm.
I would like to do a new trust. I'm wondering what is involved.
So let me ask you a couple of questions about the trust you have, because when I meet clients that have estate planning documents, in all fairness, I tell them up front, look, if I don't need to recreate the wheel and you don't need to spend any money, don't do it, right? There's no reason to do it if there's just for me to recreate the wheel. So just because they're hard to read, I get it. They're complicated, they're hard to read, and when I meet a client, I read it to them in English after I give it to them to read. So you might just need this reread to you in English by your estate planning attorney. But first of all, is it revocable?
No, yes, it is. It's a revocable trust.
Revocable. And how old are you?
I'm in my 90s.
Wow. God love you. That's awesome. So roughly how much are you worth, round numbers? Like more than the Massachusetts $2 million exemption or less?
Just less. Mm-hmm. A little. Mm-hmm.
The only concern I would say then for what you do have is it's revocable, and is one of your concerns trying to protect any of these assets if in the event in the future you needed long-term care?
No.
All right. So that's not a concern. If protecting assets is not a concern, the revocable trust for someone your age, your net worth, worth less than the $2 million exemption, likely doesn't need to be redone. It's just my initial reaction. It puts your assets in there. You're probably the donor. You're probably the trustee. You're probably in control of the assets. All good. It'll avoid probate. I think the most important part for you to read it, rather than get into all the weeds back in page 25 or 30, look for the paragraph that says, upon the death of the donor. Okay? And just read that paragraph. Because, again, if it's revocable, retitle your assets to the trust. You lose no control. You do everything you do during life today. No tax return. And if it says upon the death of the donor, I don't know, equally to my kids or whoever you're leaving it to, as long as that paragraph is still doing what you want it to do, leave it to who you want to leave it to, there might be no reason to update your document. So I hope that helps. At least check that out first. If that's not what you want and you want to change it, then you need to either amend the trust or we can certainly do a new one at that juncture. Folks, that's just one thing. I'm glad she did the planning. Kudos to her. But a lot of people just put together a life estate and they throw their house in a life estate deed, give it to the kids or give it to a trust and then keep a life estate. Folks, you don't always know what you get. This calculating the consequences of a life estate guide tells you the 3 ways in which I would ever do a life estate. It tells you the 2 ways in which they're created. I always like to say the right way and the wrong way, but please learn about the ways they're created. If you also tells you all about the gift tax, the income tax consequences, the ability to sell, the creditor risks, it really tells you what you have and maybe what you don't have. So if you've got a life estate, this guide's for you because you can find out what it is and maybe how to get out of it. If you don't have one and you're thinking about getting one, then you can get the guide and learn whether you should actually have one. Folks, 866-848-5699 or legalexchangeshow.com. You can download it there. Again, 866-848-5699 or legalexchangeshow.com. And you can also go to our Instagram page, Cushing Dolan PC, for lots more information.
Todd, we got another one for you here. Let's go to Brad in Winchester. Brad, you're on with Todd Lutzke.
Hi, I own an investment property, and it has equity in it now. I've owned it for a long time, and I'm thinking of putting it into a trust so that I can avoid the 5-year look back. My question is, though, does that lock it up permanently? If I buy an investment property, if I buy a second home or something and retire, can I get the money out of it, or is it permanently stuck in it then?
Oh, no. So I assume you are you married, single?
No, single.
Single, no kids?
No.
Okay, so you might, so when you talk about, avoiding the 5-year look back period, to me, you're saying I want to protect it from the nursing home. My initial question would be, who are you protecting it for?
Relative.
Okay, so there is someone you need to. Okay, great. So as long as there's a family member that you need to protect this for, then yes, I think the irrevocable Medicaid trust is probably right for you. And one last question: how old are you?
64.
54, maybe a little early. 60 and over, I like to think about these irrevocable trusts, but there's no magic number. And so to answer your question, you can put a rental property in there for sure. You can continue, well, you need someone else to be trustee, so maybe your sister or someone other than you. You can continue to collect the rent like you do now. You continue to pay the bills like you do now, use your money. You're allowed to sell the house anytime you want to sell it. You could use the money to buy another house if you wanted to do that inside the trust, whether it's rental or a house you want to live in. All that flexibility remains available to you. You can also then, if it's turned into money and you want it all back, again, you're going to have to sit down with the family and figure out who you're making beneficiaries of this trust. But there is a way to take assets out to the beneficiaries who may or may not give it back to you, but be careful. So it's not locked up per se, but I think you have a lot of control over it. I think it's worth looking into and getting a little more in-depth discussion about it. A lot of flexibility for you.
Todd, I've got another one for you here. Let's go to Philip on the Cape. Philip, we only have a couple minutes, so you got to be quick, but what's your question?
Todd, you did a irrevocable trust for me 8 years ago, and now I'm concerned you talked about the Massachusetts $2 million exclusion.
Yes.
Well, everything has increased, so it's over that now. Is there anything I need to do going forward?
Great question. So are you, how old are you now?
78.
Are you married?
Yes.
Did we do one trust or two trusts?
Two trusts.
So you're in good shape because my trusts are flexible enough that I assume we like put this house half in your trust and half in your wife's trust, correct?
Bingo, correct.
Good. And how much is the house worth?
Well, it's not just the house. There's several of them, and they're all rental and
So how much is in each trust, a round number?
$5 million.
In each trust?
No. Well, say 2 in one and 1.5 in another.
So let's just call it, even if it's 2 and 2, don't worry about it, right? So the bottom line is that these trusts are designed to shelter $2 million each. So now you can actually shelter $4 million from Massachusetts estate tax with these trusts. So they are doing everything you want them to do. They are providing you income, avoiding probate, protecting from the nursing home, and still sheltering the maximum amount that we can shelter from estate taxes. Kudos to you if you get over the $4 million limit. Well, yeah, there's some tax for that. We can sit down and think if there's anything more you need to do for that. But right now, I think your trusts are doing wonderful, and you're sheltering the whole $4 million from estate taxes. So there you go.
Mr. Lutsky, thanks so much for joining us today.
Always a pleasure. Thank you.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated.
Still a bunch that we got to get to today. We're going to be talking about this afternoon's Fed meeting. Gosh, didn't that sneak up on everyone. We'll also talk a little bit about what is going on in gas prices and the impact on the U.S. economy as a result of how those have shifted. We'll talk a little bit more about private credit and the problems that we are seeing there. And then also prediction markets, a little bit of news out of Arizona that we'll touch on as well. So quite a bit to get through today. And obviously, if there are any new developments in the Middle East, we'll keep you apprised of what is going on there. Quick break. Back in a bit.
Life estates are sometimes used to protect your home as part of your future, but it's important to understand how they really work before making any changes to your estate plan. Cushing & Dolan are experts in elder law and taxation. Their new guide, called Calculating the Consequences of Life Estates, explains the pros and cons and why careful planning is so critical. A life estate can allow you to remain in your home while transferring future ownership. But decisions like putting the property in your children's names versus using a trust can have very different consequences when it comes to taxes, control, and protection from creditors. Before you sign any deed or transfer property, be sure you understand your options. Call Cushing & Dolan at 866-848-5699 and ask for your free guide today. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Have you saved enough for retirement? This is Mike Armstrong from the Armstrong Advisory Group. The advisors at our firm have 150 years of combined experience in the financial services sector, and they all work together to help you develop a unique financial plan that offers investment management, financial planning, tax strategies, and retirement planning. It's our goal to help you position your assets and give you peace of mind. Having a solid retirement strategy and investment plan becomes more important as you age, so visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Just click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us develop a plan to help you secure your financial future. Again, that's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Divorce isn't just a legal process. It's a financial reset. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide, Divorce and Your Financial Plan, walks you through how to take inventory of your assets, avoid common mistakes when splitting accounts, update beneficiaries, and start building a plan that works for your next chapter. Divorce is complicated enough without all of its financial ramifications. The decisions you make now can have lasting consequences for your future, because after a divorce, it's not just about who gets what. It's about making sure your financial life is truly separated and set up to support your goals going forward. Call the Armstrong Advisory Group right now at 800-393-4001 and get your free guide, Divorce and Your Financial Plan. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today, we're talking about the use of life estates and your primary residence. Todd, does the 5-year waiting period for Medicaid eligibility apply to the creation of a life estate?
Well, the short answer is yes, it does. But let me explain why it does. So, first of all, when you create a life estate, again, the general way people do it is they tend to put the remainder interest of the property in the hands of children. I don't like it that way, but that's how they do it, when you could have the remainder interest with the trust. But the moment you put the child's name on the deed and you reserve the right to live there is a completed gift for gift tax purposes. No one thinks of that, but now you technically need to file a gift tax return. And it's that creation of the gift, it's that transfer of that remainder interest in the property to the child for less than fair market value that triggers the disqualification period for Medicaid. So that's why you have to wait 5 years after you create this life estate arrangement in order for the house to be protected from the nursing home. It's very hard to avoid the 5-year waiting period, folks. There's really not too many ways around it.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. You can get it by calling 866-848-5699. That's 866-848-5699, or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zada and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zada and Marc Fandetti.
Chuck, Mark, and Tucker with you. And early this morning, around 8 a.m., the Israeli government indicated they had attacked facilities in the South Pars gas field in the Persian Gulf. This is the largest gas field on the planet. Some estimates, in fact, say that it may have more natural gas in it than every other gas field combined. And basically, this is a shift in strategy for the Israeli Air Force in terms of potentially targeting upstream oil assets. Iran, 15 minutes later, indicated and confirmed that this facility had been targeted and that they were shutting down some production from it. And they also indicated a list of 5 targets in Qatar, the UAE, and Saudi Arabia that they were likely to target in the near future, and urged evacuations of civilians from those targets. All 5 of those targets, by the way, are oil production facilities that have Western partners associated with them, either an ExxonMobil or a Chevron or someone like that, who is a part of a joint venture in the region. So on this, this has basically taken what looked to be about a 0.5% rise in S&P 500 futures and turned it into about a 0.5% decline, so about a 1% intraday swing. And Brent crude, which at the time was down about 0.4%, now up about 5.75%, following the move that we have seen here. So we'll continue to watch things and see how they change, but that is, continuing to show that oil is in the driver's seat as far as what's going on with equity markets in the short term. Taking a look through other markets, we've got the Dow down 318 points. The NASDAQ Composite is off 86. So again, anywhere from about 1/3% to 2/3% move down across your major U.S. indices. 10-year Treasury moving up 2.2 basis points on combination of higher oil prices and a hot producer price index reading for February that came out at 8:30 a.m. The dollar is up another 0.28% to 99.6. And we've got gold falling significantly today, down $136.90 to $4,872.80. Crude oil we talked about. There is a divergence that's widening in the short term here between West Texas Intermediate and Brent. Now a $10 spread between the two of them. And that is what is moving in markets today. Mark, you'll notice that I didn't mention the fact that we've got a Fed meeting today at 2 p.m. Talk to me about the Fed today. I have my theories. I'm interested in yours, though.
Well, it's probably... Boy, I can't think of a worse time, because all their choices are bad choices, to be a monetary policy maker. We had inflation of roughly 3% last year using the Fed's choice measure. That's not bad if wages went up by more than that, which they did. But it's way above their 2% target, obviously.
Sure.
And we talked throughout the disinflation that happened, the reduction in the rate of inflation from roughly mid-2023 on. We talked a lot about, well, do you need to get inflation back down to 2? Can you live with 3? Can you live with 4? And we said, sure, you can live with any rate once people start to incorporate it into their expectations. Wages and prices just adjust, no problem. As it turns out, there is a little bit of a problem with not getting it down to 2. It's that when you have a supply shock...
And this is what we talked about all last year, which is you don't want to bottom at 3. You can average 3, but you don't like to bottom.
Yeah, I mean,
we've
done the same thing with monetary policy as we've done with fiscal policy, which is not prepare for the rainy day. We've run emergency-sized deficits. We've run emergency-sized Fed balance sheet, and we continued the expansion. We resumed the expansion of that so-called balance sheet to keep longer-term interest rates down even before this shock. And we've given ourselves very little room to respond to a shock as a result. Inflation expectations remain elevated. Now I'm jumping around a little bit. Let me just summarize by saying the Fed has a choice here. This is a big shock. It's going to make its way into all items inflation, so-called headline inflation, and depending on its duration, it will make its way into the trend in inflation too. Fed can't do anything about events in the Middle East, but the Fed can decide how much trend inflation will go up as a result of this. And by that I mean they need to decide, are we going to accommodate this shock? Are we going to allow expectations to rise and become self-fulfilling? Or are we going to nip it in the bud? And nip it in the bud may mean more than standing pat today, which everybody thinks they're going to do. It may mean actually pushing against it with tighter monetary policy. Otherwise, you run the risk of inflation becoming embedded. It probably won't go as high as it did in 2022 because there were both supply and demand factors at work there. But it could get uncomfortably high again and become uncomfortably persistent, as it has been for most of this decade. So this is a very bad situation for the Fed.
I want to touch on just what you said in terms of, what the Fed may or may not do. So if you went back a month ago, there was a 93.6% chance the Fed would do nothing today. There was a 6.4% chance the Fed would cut by 0.25%. This according to the CME FedWatch tool that shows current pricing on these things. Fast forward to today, 98.9% chance that the Fed maintains its current interest rate posture. You do actually have a 1.1% chance of a hike that is priced in now and no chance of a cut here. Now, today isn't really what matters. What ultimately matters to monetary policy, in my opinion, is the rate path, the eventual, terminal rate, be it, high end or low end, and, what's also communicated about that along the way. What you have right now is the market has basically taken cuts off the table for the remainder of this year. I'm looking at the calendar this year, and the market is pretty much saying, no, like maybe you get a December one that happens, but even that is being priced in as a coin flip.
Yeah. Okay, the problem with that is that as inflation goes up, real rates go down.
Yes.
And real rates going down is stimulative. Now
you can make a case.
Go ahead.
Here's the case that I think the Fed will make. I forget who said this earlier this week. It's where I picked it up from. The Fed's going, if they want to, the Fed can make the case that an oil price shock can act as effectively tighter monetary policy in terms of restricting household, purchasing capacity otherwise. And so by virtue of doing nothing, the Fed can balance that.
Yeah, the problem with that reasoning, and people advanced it in the 70s, is that it neglects expectations, which was the key observation to come out of that 70s experience. If you let expectations run ahead, if you let real rates get more negative, if you sort of ignore that or try to look past it and ignore the expectations component, you lose control of inflation like the Fed did in the 70s. I mean, I hear you. I used the term supply shock earlier. People throw it around, but it technically means something that both lowers the GDP growth rate and raises prices. So it's doubly bad. A demand shock is kind of more fun. It raises the growth rate, the real growth rate. Real growth grows faster than prices. Supply shocks are really, really unpleasant.
Now, the anecdote that supports what you're saying it was either yesterday or Monday, I forget which one. The Delta CEO was out talking about, what they've seen so far, and he said, look, what we are seeing is a significant push on our cost structure. The amount that I've seen, I think I want to make sure I get the numbers right on this in terms of the time period here. Is again, I just want to make sure that I get it right. Let's see. Yep. So Delta's saying, look, we've already incurred an additional $400 million in fuel costs. Delta CEO says we've pushed through 2 separate price hikes on routes, and we've received, no indication that we're getting meaningful pushback. That, to me, would be an example potentially of inflation expectations being embedded where consumers see prices go up for routes that they've flown previously or for trips that they're looking at, and they simply say, yeah, we have no problem accepting that because the psychology is, okay, the prices are going to go up or the prices may get worse, and so we're willing to pay the higher ones now to lock that in.
Yeah, that could be an example.
At a micro level, that could be what you're seeing there potentially.
Yeah, sure. So it's always hard to...
you can't untangle all the specifics
and then aggregate these anecdotes, but that's one example of how it can become embedded. We don't know if demand. There are a couple factors at work. The supply shock, this oil shock, and it is a really big one, as you were pointing out in the earlier segment. It's going to cloud everything for a while, and it's going to paralyze the Fed. But the Fed not acting does not mean monetary policy is not changing. It is, because markets dictate monetary policy in between Fed meetings. And the worry here of students of inflation and researchers is that the Fed is going to make the same mistake it did in the 70s, but for different reasons. Their tools and our understanding of the economy is way more sophisticated now. But thinking there's not much they can do in the short term, so just do nothing. Let real rates come down. The economy both overheats and at the same time is dealing with the impact of this supply shock.
Let's take a quick break. When we come back, we've got trivia right after this.
Market insight, retirement strategies, real talk about Wall Street and economic trends. All live every day on our YouTube channel. Go to youtube.com/The Financial Exchange Show. This is The Financial Exchange.
When going through a divorce, understanding the rules around your finances can make a real difference. This is Chuck Zada from the Armstrong Advisory Group. State law plays a major role in how assets are divided, whether that means a strict split or a distribution based on what the court considers fair. Health insurance and Social Security benefits are other considerations that you'll need to prepare for. You may have been covered under a spouse's plan and now need to find one of your own, and Social Security may offer benefits based on your former spouse's record. Our new guide, Divorce in Your Financial Plan, will walk you through these issues and more to help you make informed decisions that may affect your future. Call 800-393-4001 to request your free copy. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your home at the life estate can be problematic if you don't understand the rules. Cushing & Dolan's new guide called Calculating the Consequences of Life Estates can help you learn about how this strategy works and what to consider. Call Cushing & Dolan at 866-848-5699 and get your guide today. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. The DAV 5K raised over $150,000 last year, but we still need your help. You can support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation, 2 medical appointments, and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston. Time for trivia here on the Financial Exchange. And on this day last year, NASA astronauts Sonny Williams and Butch Wilmore returned to Earth aboard a SpaceX capsule. The astronauts were scheduled to be in space for 1 week. Unfortunately, technical issues forced the astronauts to be stranded in space for months. So, our trivia question today: how many months were Sonny and Butch stranded in space? Once again, how many months were Sonny and Butch stranded in space? Be the 5th person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the 5th correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
We got a piece in the Bloomberg. It's titled, "Investors Are Wondering If Stocks Have Seen the Worst of the War." And the answer is, no one has any idea. So, I don't have any unique insight as to, yes, the worst is over, and no, the worst is yet to come. I don't know, because things can change very quickly. And what I can tell you, and I talked about this a little bit with Mike on Monday morning, is, Marc, were you listening to the show on Monday?
No, I wasn't.
Okay. I'm going to ask the same question that I asked Mike on Monday. What has been the...
I don't know.
Thank you, Michael. What has been the single most powerful force in markets in the past 14 months?
Are you asking like which sector is pushed?
No, I'm asking you what has been the single
story when you say force?
What has been the most the most powerful thing that can move markets in the past 14 months?
The prospect of Fed rate cuts seems to be the dominant narrative, but that's a qualitative answer. There's a quantitative answer.
Tucker, do you have a wrong buzzer that you can play for me?
Not ready, no.
But do you have one? Like we can kind of build up to it. No. Okay.
Oh well, AI enthusiasm. I mean,
no,
we've been qualitative
wrong.
here.
Still wrong.
Oh.
Do you want to go 3 for 3?
Yeah, probably.
What's your
yeah,
third
I
guess?
almost always do.
Most powerful force in markets for the last 14 months.
Is it something vague like optimism?
No.
Okay, go ahead then. Kill the suspense.
Excuse me? Well, we going Homer Simpson now? No, can I just get like an like? I
don't have it.
You don't have one of those?
Not yet.
You got Homer Simpson going dough, but you don't have an
That's correct.
Oh. In any case, I'm gonna. I don't. Are you still working on it, or should I just go do something else?
Oh, what's this? Hold on.
Okay, play that one. There we go. That'll work. Okay. No, the single most powerful force in markets over the past 14 months is President Trump. And specifically, when we talk about in any short time frame, markets, in my opinion, have learned a response that, hey, if you get too nervous about things when they look dodgy, you miss out on a whole bunch of upside. Like, this was the response all through 2025. And I part of me wonders if it is just embedded into this market right now in that, hey, if you bail out when you get nervous, you're going to miss that upside. Think about how quickly markets tried to rally last Tuesday when the Energy Secretary mistakenly announced that the U.S. had escorted a ship through the Strait of Hormuz. Like, markets are just desperate for that sense of, oh, like, this is resolved. And part of me wonders if the last 14 months, because of what's kind of been built there, like that Pavlovian response of, oh, things got bad, I should buy the dip because it'll be, resolved quickly. Part of me wonders if, like, the market psychology is just kind of broken because of that.
There's this feedback between the people in the administration who are like career TV people and internet posters and podcast hosters and the short-term traders who look for things like sound bites.
I guess it's just the question of, look, anything that broke last year in markets, the Trump administration could fix.
Well, it broke it.
They were able
to. Tariffs broke it.
Just hear me out for a second. Hey, the market doesn't like our tariff our tariff policy. Great, we're gonna punt it, change it, revise it.
That's what I mean.
Hey, we've got this go. Hey, we just signed this deal with X country. Here's this.
And wait, hold on. You don't think markets would have gone up as much if all this hadn't taken place, though? The rest of the world was up 30% in dollar terms.
From what are we talking about?
Markets would have rallied harder and more consistently without all the policy chaos, I assume.
I'm not making an argument on that.
Oh, okay, good.
I'm not making
I'm saying
any,
the results would have been the same or
no,
better.
I'm not making any Mark, you need to listen to what I'm saying.
Yeah, Mark.
Okay? What I'm saying specifically is anytime the market needed a pick-me-up, the Trump administration was able to give it to them. That's all I'm saying.
Yeah.
And so I wonder, I'm not talking about what may have been.
Yeah.
Like, forget about hypotheticals. I'm talking about what was. Anytime markets came under threat,
right.
Here you go. Here's a cookie, go up.
The rest of the world was going up.
Mark,
so there was this trend.
Mark, I'm not talking about that.
Right. All we had to do was hold the helium
Mark!
balloon with everybody else. Well, you haven't listened to me either, though. All I'm saying is that there was this powerful trend, and there was a force throwing us off the powerful world trend line.
Yes.
And all that force had to do was stop futzing with things.
But my point is, every time that they needed to, they did stop futzing with things.
Because the market provided feedback.
And it let the market go from there.
Just let it do its thing.
In this case, it is fundamentally different for a couple of reasons. The first being that there is actually another side that's already been acted on that can have some say in what plays out. The second being there's no way that you can get the market to print commodities, actually. You can't actually do that. take a quick break. When we come back, we've got the trivia answer in Wall Street Watch after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
When going through a divorce, understanding the rules around your finances can make a real difference. This is Chuck Zada from the Armstrong Advisory Group. State law plays a major role in how assets are divided, whether that means a strict split or a distribution based on what the court considers fair. Health insurance and Social Security benefits are other considerations that you'll need to prepare for. You may have been covered under a spouse's plan and now need to find one of your own, and Social Security may offer benefits based on your former spouse's record. Our new guide, Divorce and Your Financial Plan, will walk you through these issues and more to help you make informed decisions that may affect your future. Call 800-393-4001 to request your free copy. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Life estates are sometimes used to protect your home as part of your future, but it's important to understand how they really work before making any changes to your estate plan. Cushing & Dolan are experts in elder law and taxation. Their new guide, called Calculating the Consequences of Life Estates, explains the pros and cons and why careful planning is so critical. A life estate can allow you to remain in your home while transferring future ownership. But decisions like putting the property in your children's names versus using a trust can have very different consequences when it comes to taxes, control, and protection from creditors. Before you sign any deed or transfer property, be sure you understand your options. Call Cushing & Dolan at 866-848-5699 and ask for your free guide today. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, this is Mike Armstrong and Paul Lane from the Armstrong Advisory Group, and we're here to talk to you about our brand new guide, Divorce and Your Financial Plan. Paul, let's fast forward here a moment. You're through the divorce process, and now you are focused on this entirely new financial life. What do you view as the first step toward developing that new financial plan as you're thinking about a single individual versus a married couple?
What you really have to focus on, Mike, is the cash flows of your household. You've gone from presumably 2 incomes down to 1 income, or you're just living off of a lesser income. So understanding what your expenses are going to be going forward and matching that to the income that's coming in to your newly formed household is really important. That is something that is a area of significant focus, as well as health insurance coverage is another area that is of significant importance.
How things like taxes and general expenses, how does that all change now if you're thinking about a single person versus a married couple?
Yeah, the tax brackets will change for a single filer versus a married couple, usually to the downside. Really, you're going to pay more in the way of taxes, so that's something that's really important to focus on, as well as many other areas of your financial plan.
Folks, we've got a brand new guide, again, from the Armstrong Advisory Group. It's free, and it's available at armstrongadvisory.com. You can request it there. It's Divorce and Your Financial Plan. There is a lot that goes into rebuilding your financial life. after a life event as consequential as a legal divorce. If you have questions about how to navigate that process, this new free guide from the Armstrong Advisory Group is a great starting point. You can get it by requesting it again at armstrongadvisory.com or calling us at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are pulling back as oil prices are climbing higher after Iranian state media reported explosions in the world's largest gas field. Investors also awaiting the conclusion to the Fed's meeting this afternoon, where interest rates are expected to remain steady. Right now, the Dow is down nearly 0.9%, or 400 points lower. S&P 500 off about 0.5%. NASDAQ also off about 0.5%, or 100 points lower. Russell 2000 is down 0.75%. 10-year Treasury yield is up 2 basis points at 4.228%. And crude oil up 3% higher today, trading at $99 a barrel. Macy's shares are up over 4% after the department store chain said its sales were unexpectedly lifted by its Bloomingdale's brand, where it saw a surprise 1.8% rise in same-store sales in the holiday quarter. Sticking with retail, where Lululemon posted a decline in profit after it sold more products at a discount. However, shares are rising over 3% on the day. Meanwhile, Bloomberg reported that Unilever is considering a separation of its food assets to focus on beauty, personal care, and well-being brands. Unilever stock is down by 3%, and chip maker Micron Technology will post their earnings after today's closing bell. I'm Tucker Silva, and that is Wall Street Watch. In the previous segment, we asked you the trivia question. How many months were Sonny Williams and Butch Wilmore stranded in space? That'll be 9 months. Who was our winner today? I wrote it down. I wrote down the town was in Orleans. Susan. Susan Orleans, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Susan. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
So, there's a piece in the Wall Street Journal, the New York Times. It's titled, "Why This Jump in Gas Prices Feels Different." And this basically where we are here is whether you're looking at 20-day change or 4-week change. The change in gas prices that we've seen is now the largest in a short period of time since Hurricane Katrina, which was still a little bit bigger than this. But that's the magnitude that you're talking about here. If you're looking at the largest 20-day change, it's around a 27% move that we've seen there. The 4-week change is just a touch higher than that. And couple things on this. The big thing is, look, this has happened in a very short period of time. Even back in 2022, when gas prices went to all-time highs, the 20-day change that we saw was only around a 23% move, and the 4-week change was a 24% move. But you were also starting with gas prices higher to begin with, and then that rise continued a little longer, and so that's what ended up getting you north of $5 a gallon for the first time ever. So, a few different things on this. The first is that I think that when we look at this in the context of the U.S. economy, one of the things that I will point out is the impact of a rise in gas prices on the U.S. economy is smaller than it's ever been for 2 reasons. The first is that when you look at overall, any type of fuel as a percentage of household budgets, it's declined from around 6% of household budgets in the late 70s to around 2% today. The 2 culprits on this are, number one, fuel efficiency, where the average miles per gallon of a vehicle in 1975 was around 13 miles a gallon. Today, even looking at cars and trucks combined, you're somewhere in the high 20s. And so, literally, our vehicles are twice as fuel efficient, so you don't need as much gas. The other piece is when you look at the shift from rural concentrations to, not rural concentrations, but the shift in where people live, you've largely seen a move that has been away from more rural communities and towards ones that have additional mass transit. And so there's a different percentage of people that are not necessarily driving on a daily basis. They might have other means of transportation relative to what it used to be. So that's kind of been one piece. The other is, hey, we produce a lot more oil and gas and natural gas than we used to. And so that means that even though for where our show is based in the Northeast, high gas prices, we get just the bad side of things. If you're in Texas, you get, far more of the good in terms of, hey, all those, anyone working in the oil or energy sector has, more money to spend and so on and so forth. And so that offsets some of things. And there are some communities that, are kind of in between. So overall, I do think that when we look at the impact of gas prices on the U.S. economy, it's smaller than it ever has been. This is a much more rapid move in gas prices. And by the way, it's not over. If you look at where short-term gasoline futures are pricing things, AAA national average right now sits at 3.84 and 0.2 cents. That's up 5 cents overnight. We're probably heading for the 4.05 to 4.15 range by the middle of next week. So that's where the national average will be. If this conflict continues for an extended period of time, and I would define extended, in the context of this, if we're still sitting here, again, in early May and this is still going on, you have a legit chance that gas prices are somewhere in that $5.50 to $6 a gallon range. I don't know that, we're actually going to get there. This could be over sooner, but I'm just putting it out there. If this is over in the next week or two, I think there is a path where gas prices can get back into the mid threes in the next 6 to 9 months, but we're not heading back below $3 a gallon anytime soon, simply because of the already existing supply disruption and the fact that you've had a bunch of production that's had to come offline, and that's not just going to spool back up due to a number of different factors. So I think that when we look at this, there are paths where the price of gas can start to move down, in the next month or two, but they require a complete cessation to hostilities in order to get there. And that's going to have to be something that you see in order to be convinced that gas prices are going to move down over any extended period of time here.
Yeah, it's tough applying the response of consumers and producers in past episodes to the current episode because the structure of the economy has changed. Yeah, the economy evolves, as you pointed out. We do know that consumers consume about 400 million barrels of gallons of gasoline a day. You can get that from the EIA, and I'm rounding up a little bit. So, a 75 cent per gallon increase is a $300 million a day tax increase, just back of the envelope. But as you point out, there are people who benefit from this too. That's not disputed. The question is, how much out of an incremental dollar of income do they spend versus everybody else?
And also, remember, when we talk about the people who benefit from this, those extra dollars have to pass through in some way. If ExxonMobil simply takes extra profits and says, okay, we're going to reinvest this in our business in Guyana or somewhere like that, it doesn't necessarily come back to the employees. If it's, no, we can afford to pay you more, we need to do more work, and so the demand is there, or, hey, ExxonMobil shareholders, here's a bigger dividend that comes out, and that money can get into the U.S. economy then there's a clearer path there.
Yeah, that's why you have to be specific and say how much will they spend out of every additional dollar. Because as you pointed out, there are lots of other possibilities. The guy that has done the most work on this, Jim Hamilton at UC San Diego, he wrote the seminal paper on this subject in 1983, and he's updated it since.
What's his name?
James Hamilton.
Okay.
He's a famous econometrician, which is a fancy way of saying he works with data and tries to make inferences from
He's a great nerd.
Yeah, he is.
He's an awesome nerd.
Yeah, he is. Very useful in situations like this. It's his view for what this is worth, and he's the guy who pointed out that when he wrote his initial paper, every recession, there were 9 of them at this point, prior to 1983, has been followed by a big run-up in the price of oil. That hasn't always been. There have only been a few since then, and 2 of the 3 since then the run-up in the price of oil has coincided with the beginning of recession. They don't always cause each other. The economy's hot before a recession, by definition, because it peaks at a recession and then gets slower. The growth rate gets slower, but it certainly doesn't help. So it's his opinion for what it is worth, and this is sort of the last really smart person I read on this, so it's something I'm just regurgitating. This goes on another couple of weeks. It's going to be a serious drag on GDP, and it's hard to see how it couldn't be.
And worldwide, you're talking about a very different impact in the U.S. Like you're at the point where, quite honestly, it would be surprising to me if a lot of Southeast Asia is not in recession by the end of this year, based on what we've seen already. I mean, like you go through just what some of these countries are putting in place, and I really should keep this list handy. There's one that has now moved to. You remember back in the 70s, the U.S. went to the odd and even plates for filling up on any given day.
Vaguely, I mean, even before my time.
I know, but like you're familiar with
I've heard of that.
Yes. I forget which country it is in Southeast Asia. They've gone to now. You can only drive on the roads on these days based on odd and even plates.
Yeah.
You have other ones that have said, hey, stop wearing long sleeves so that we don't have to air condition the plate, like indoor, as much. There's countries that are saying, stop taking elevators, take the stairs because we don't want to run the electricity for the elevators. Like this is the level of panic that they're at in Southeast Asia because they don't have the supplies to be able to handle this. So in the U.S., prices go up. In Southeast Asia, you're going to see shortages. Like that is where we are heading at this point. So let's take a quick break. When we come back, we'll do a little bit of stack roulette. We'll also talk, I do want to touch on private credit right after this as well.
Text us at 617-362-1385 with your comments and questions about today's show. And let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network. Protecting your home at the life estate can be problematic if you don't understand the rules. Cushing & Dolan's new guide called Calculating the Consequences of Life Estates can help you learn about how this strategy works and what to consider. Call Cushing & Dolan at 866-848-5699 and get your guide today. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
When going through a divorce, understanding the rules around your finances can make a real difference. This is Chuck Zada from the Armstrong Advisory Group. State law plays a major role in how assets are divided, whether that means a strict split or a distribution based on what the court considers fair. Health insurance and Social Security benefits are other considerations that you'll need to prepare for. You may have been covered under a spouse's plan and now need to find one of your own, and Social Security may offer benefits based on your former spouse's record. Our new guide, Divorce in Your Financial Plan, will walk you through these issues and more to help you make informed decisions that may affect your future. Call 800-393-4001 to request your free copy. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all.
Visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Life estates are sometimes used to protect your home as part of your future, but it's important to understand how they really work before making any changes to your estate plan. Cushing & Dolan are experts in elder law and taxation. Their new guide, called Calculating the Consequences of Life Estates, explains the pros and cons and why careful planning is so critical. A life estate can allow you to remain in your home while transferring future ownership. But decisions like putting the property in your children's names versus using a trust can have very different consequences when it comes to taxes, control, and protection from creditors. Before you sign any deed or transfer property, be sure you understand your options. Call Cushing & Dolan at 866-848-5699 and ask for your free guide today. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Follow the Financial Exchange on Instagram for market insight, clips, reels, and daily money talk. This is the Financial Exchange Radio Network.
The Money Matters mailbag debuts on the Financial Exchange tomorrow. It's your chance to ask the questions about business and the economy that you want answers to. So all you have to do, leave us a voicemail at 339-399-4333. Leave your voicemail anytime, day or night. Once again, the phone number 339-399-4333, or shoot us an email at tfeshow@gmail.com, and we may use your question on the show.
Bill Dudley is the former president of the Federal Reserve Bank in New York. He's got a piece in Bloomberg today. Private credit is bad, but not 2008 bad. And I think that's probably right. Not for the reasons that Bill mentions necessarily. Bill talks about the funding mechanisms are different and, the blah, blah, blah. Quite honestly, the biggest reason why private credit probably isn't a 2008 situation is that the market's not as big as the mortgage market was then. And it's tough for something that's smaller to have the same size impact. You need to have more that goes wrong. There still is a wide gulf between a 2008 size impact and something that can cause problems in the broader economy. But I don't think we're heading for a 2008 situation where the broader, financial plumbing locks up because no one wants to lend to anyone and, banks are going, down left and right. But I still think that there could be some problems related to private credit. It's just not a 2008 situation. I think that that's a fair assessment for, a different reason.
Yeah, I don't think this is going to approximately, that's important. We don't know the channels that the risk that these quakes are going to take. If there is, we might know the epicenter, but you don't know how it's all going to shake out. Banks are not as exposed to this asset class, very little to no exposure that I'm aware of, relative to their exposure to mortgages. So that the problem in mortgages threaten to take down the lifeblood of the
banking system.
Heart, really.
Yeah.
Thank you. Yeah, I should just say the banking system. There's that. I think I had another parallel in mind, but I'm not sure it's apt. So yeah, that to me is what makes this different. But again, you don't know, you can't trace after a crisis, the channels are obvious. Why didn't we see that structural flaw that when this part of the structure responded this way, it would put more force on that part of the structure. That part of the structure is not rated for that much force. And I'm using like a corny engineering analogy, but you get it.
Yeah.
So it's always hard to see that beforehand, but it's not obvious to me, given who owns private credit and how diverse an asset class it is, that it could be the epicenter of some cataclysm like mortgages were in 2008. But I don't want that played back in a year if it does happen and sound stupid. I'll qualify that with nobody really knows, like Dudley says here.
Sure. And I do think an interesting one that I saw this morning, and I hadn't thought of this, but I'm trying to find the exact quote on it just because it's one that I had not come across just kind of in terms of, thinking about it. But someone mentioned, hey, isn't kind of an interesting comparison. We're always trying to find like historical comps to where we are right now. And one of the ones that I finally saw brought up that I'm like, oh, that could hit is 1990. 1990, you had payrolls that were slowing down already coming out of the 80s. Then you had a surge in oil prices with Gulf War I. And you also had a real estate cycle, commercial real estate cycle that was kind of getting funky as well. And it's very possible that that could be similar to what we end up with, how 2026 looks. So, again, there's all kinds of different shapes that this can take. But I'm surprised that I hadn't thought of, 1990, why isn't that, a valid comp? It could be an interesting one to consider.
Yeah, that recession was dated by the NBER, the arbiters of these things, to July.
Yep.
Saddam invaded Kuwait in August.
Yes.
So the recession was already
begun.
We know that it wasn't called, and we didn't know in the summer of 90 that the economy was in recession. That was called later, because you never know when you're in it, other than self-imposed ones like, say, 2020.
Yeah. What else you got for me, Mark? Anything you
the
wanted
cost
to get
of
to?
did you see the story? Tucker pulled it. Cost of the AI boom, a trade deficit the president detests. I want to make the simple point that more investment is good because it makes up for our deficient savings. We're a tremendous investment opportunity, the United States is.
Yeah.
We suck in a lot of capital. The unavoidable flip side of that is a trade deficit. That capital, one way to think about it is the dollars we send abroad to buy a Sony get recirculated by Sony into either dollars in bank accounts where they can just hold them, or more likely into U.S. investments.
Which
So
can be the form of,
again,
it can be either, remember, when we talk about U.S. investments, it could be building a factory.
Right.
It could be buying
Hopefully.
farmland. It could be buying U.S. stocks. It could be buying U.S. bonds. Yep. Any of those qualify as an investment.
And think about when a foreign entity buys bonds, it helps keep our interest rates lower. That's one of the reasons why having the world's reserve currency, people needing to hold dollars or things that are very close to dollars, keeps cost of financing in the United States low. So you can't have a foreign financed investment boom without a big trade deficit, and that is a good way of making the point that a trade deficit is not inherently bad, nor is it inherently good, but it's not inherently bad.
They can be bad in some situations. It depends on mediums of exchange, like underlying, where the imbalance is and things like that. There are reasons why, again, things that you get nervous about. Hey, if we are an island nation and have to import all of our energy and, all of a sudden, that's got a structural deficit that we're dealing with there to begin with, and then you have higher energy prices, what does that do to the overall economy? There's some real problems there in terms of then trying to balance that trade deficit with what's going on the capital side of things. Like, you run into issues there. But, again, trade deficits are not inherently good or bad. It's kind of like anything else. Like, movies are not inherently good or bad. Some of them can be good, some of them can be bad, and there are reasons why, you might choose not to go to certain ones.
Someday a politician's going to come along and say, I hope the trade deficit explodes. That means we're a wonderful investment opportunity. Now, to your point, there are some weaknesses to that argument, but what's wrong with foreigners wanting to buy our treasury bonds, et cetera?
And the other part that we do get at with that is that investment is not often received anywhere near equally amongst U.S. citizens then, and that has repercussions socially.
That's something we neglected, yeah.
Quick break for the entire rest of the day, but we'll be back tomorrow.